Good morning, investors. Welcome to the February 16th webinar presented by Portfolio Builder. Folks, I want to welcome you all in and thank you very much for taking the time to join us here today for our presentation. Folks, my name is Dean Gallagher. I'm an investment consultant and partner here with the firm. Folks, what I'm blessed with the opportunity to do each day is to basically show everyone that's on our one-time free trial exactly how we're outperforming the market this year and show them what assets to own now. And some of them you're actually going to want to own for the rest of your life and actually never sell them too. Okay, so we're going to show you guys how to do that. And just real quick, guys, you're going to see on the left-hand side of your screen, you're going to see my Think or Swim portfolio with our model portfolio. Okay, this is the Safe Alpha portfolio. This is our medium risk portfolio. Okay, it currently has a performance of 24.84%. And if we look at the comparison to the S&P 500 here at 4.93%, well, just real quick, folks, I know doing that math in my head, that's a 500% outperformance to the S&P 500. And currently to the day, we're actually performing at 35x what the S&P 500 is doing today. So pretty neat to see this here, guys. Okay, and interesting, this is rare, but our UVXY position is actually pushing up a little bit today. Okay, and so actually all assets are pushing up in the portfolio. We don't intend for this to push up. Okay, guys, we actually intend for this to drag on our upside. Okay, but that intention, guys, and that calibration of the portfolio set is what allows my clients to sleep like absolute babies at night because it keeps them safe, and that's their disaster insurance. Okay, so pretty cool, guys. When you're looking at the portfolio here and you go, oh well, what's this big, negative number? It's expected to be a drag on the portfolio to the upside, guys. But look, you can still make some serious returns with a huge hedge in place. Okay, so that's the beauty of risk parity. We're going to explain that in detail here today. And the performance so far is 24.84% to date here. Okay, or just shy of $250,000 of profit on $1 million portfolio. Okay, let's take a look at the positions, guys. We're going to do the 10,000 foot overview. Jason's going to jump deeper into this. Our COPEX position before we started up the webinar was up almost 7% for the day here. Okay, that, guys, is a great way to get exposure to the best copper miners that exist on planet Earth today. Okay, you might ask yourself, why in the world do you guys own the copper miner ETF? Well, there's this thing that you may have not heard about yet called the Belt and Road Initiative. Okay, it's going to be the largest infrastructure project ever created on planet Earth today. Okay, and so we will absolutely show you guys in great detail, okay, why you want to have that exposure, okay, and really, guys, not only for the largest infrastructure project on planet Earth, that's going to be the basically kind of the corporatist way of monopolizing power for 5 continents, okay, it's going to take a ton of copper to connect all of the circuits together to be able to produce this green energy push and initiative that Warren Buffett is financing and Bill Gates is trying to get his hands into everywhere possible. Okay, so we're going to show you guys how to front run the largest infrastructure project on planet Earth with COPEX. Okay, and that is providing the largest lift in our portfolio here today. Pretty neat. That is our newest position as well. So once again, Jason, you just absolutely have nailed this. Okay, next, folks, we're going to take a look at the rare earth mining ETF. Okay, so with certainly with all the pushes into green energy, okay, really the creation of economy 3.0, which is going to be with AI and robotics, okay, not only is it going to need a ton of copper, and technology is growing at an exponential rate right now that's unstoppable, guys. You have to have the rare earth metals to build computer systems, okay, and to build the robotics and to build the AI that's going to be economy 3.0. All of it's going to require a massive amount of rare earth metals. So you want to front run that as well. You want to front run that economy that's being created today by owning this ETF. Okay. Now, guys, this is a neat position. And really, I was talking about the guy that had a ton of silver today, but this is working much better. This is exposure to Bitcoin, and you can own this through your tax deferred accounts if you're in the United States or if you're in Europe or Asia. Okay, but you can get exposure to Bitcoin through GBTC. Okay, and a lot of people just don't understand Bitcoin. But really, guys, why it's in our portfolio is to hedge the dropping value of our money, because we also have to have our SOS funds in the bank, right? But outside of that, guys, certainly what you can do is get exposure to Bitcoin there, so you can actually hedge the constantly dropping value of your cash dollars. Now, I tell people all the time, look, you want to have as little cash dollars as possible right now, and you want to have as much assets as you possibly can get your hands on. Okay, but to stave off that dropping right of our SOS funds that we all have to have, this is the best way to do it, guys. Okay, next, folks, we have the TQQQ ETF. So you saw this in our marketing video before you took your free trial. Okay, and that is a one-time free trial. I do want to reiterate that. Okay. But guys, this is the #1 performing ETF that's ever been created percentage-wise. Okay, it's up well over 12,000% in return since its creation. It outperforms Apple, Google, Tesla. I don't care what the stock is. It has outperformed every single stock that has over a $10 billion market cap since its inception till now. So literally, the #1 way to make the most money in the market possible over the last 11 years, okay, by just owning an ETF is with TQQQ. It's pretty cool. And no joke, that is a 12,000+% return. I think it's actually over 13,000 as of this morning. Okay. Next, folks, we are looking at UVXY. This is our safety net or our disaster insurance. Okay. This volatility is an asset that skyrockets when markets crash. Okay. So what I'm going to do really quick here, guys, just to show you guys, okay, how well that works, is I'm going to do a quick overlay here to just show you that, because this is the #1 question that we get that people just don't understand because they've never seen risk parity, right? And I get it. Before previous in life, it took me a couple of years to understand risk parity, right? But it's so cool, guys. Okay, so here's the S&P 500. Okay, and I'm just going to trace out this drop, and it's funny because today, Jason, is exactly when when the crash started last year. So it was actually the Tuesday, right, that the market was trading to exactly 4 weeks later, the S&P 500 dropped 35% in that span. Okay, and this literally marks the exact day that started last year. Okay,
it seems like market participants have that same complacency today as well.
Yeah, it's funny, huh? History tends to repeat itself. How funny. Yeah. That's why we study it ferociously. Okay, guys. So really cool here just to see the difference. Okay, and to see what this asset did. Okay, as this asset goes skyrocketing. This is your UVXY. Okay, it peaked at 135. And it came into that exact crash period at $11. Okay, so this is actually the perfect webinar to explain how well this works. Okay, literally, okay, guys, so $11 to 135. So let's just say, and not to say that it is the case, but I just wanted to show you guys an empirical example here today, okay, to show you guys those differences. Okay, and you know what? Actually, I'm going to open this up a little bit and I'm going to actually retrace this out, guys, and give me just one moment just so you guys can see it a little bit easier. Okay, and actually I'm going to zoom in just a hair and go back in time. So we're literally going to go look at the nastiest period we've had since 1929 in the US stock market. Okay, and I'm not kidding you, over that 4-week span, guys, okay, we literally had the worst sell-off percentage-wise that we've ever had in a 4-week span. Okay, so what we're doing here, guys, is we're tracing out the S&P 500 or the SPY, okay, with green here. Okay, so you guys can see what happened with the market, right, as it crashed violently and then started to recover once QE was put into work. Okay, so that's the S&P 500. Okay, and so we're going to put up top here, so we're just going to write out S&P 500. Okay, and let's just say that we had an allocation in the S&P 500 at the time. We were 85% long the SPY, and we had a 15% hedge. Okay, so that would represented a capital value of about 85 grand. Okay, and we're just going to do this for the example, guys. Now, if we just had a 15% hedge, guys, in UVXY, okay, and I'm going to look at that next, but I'm going to write this out here, okay, with UVXY. Okay, this is our disaster insurance. Okay, if we had that at $15,000, we're going to do the math here to show you all empirically that you can just super safely of basically, guys, avoided that crash. Now, did we do that? Did we have UVXY in the TQQQ at this point last year? No. But it was a whole different thing, right? We will change up those assets as the Fed makes changes. The reason why we're using leverage today, guys, is because the Fed is pumping the hell out of markets. Okay. So let's look. So there goes the SPY crashing, but the UVXY goes skyrocketing up. Okay. And it goes from, no joke, guys, $11. Okay. Literally coming in this exact period. Okay. That we were in last year where the market crashed 35% in 4 weeks. Okay. And it peaked at 135. Okay. So pretty cool. And those of you guys that can do quick math in your head, you already understand that that's a huge 12.27x return in that same time frame. Okay, from your insurance. So it's pretty cool, guys. If you take 135, okay, simply divide that by 11, you're going to see here that gives you a 12.27x return. Okay, or 1,227% return. Okay, so let's take that number, right? Oops. So we have our 12.27%. I'm just going to multiply that, guys, times the $15,000 hedge we had coming into that. Look, guys, your hedge at just a 15% position just went from $15,000 in value to 184K. Okay, and net that produces an 84% return for you going through that same crash. So a lot of people are super paranoid. That they're like, "Oh, Dean, the market's topped. I'm so scared to buy in." Well, I understand that, and I understand that notion. But look, guys, if you invest properly, look at this. Okay, you turn your $15,000 hedge into an $184,000 position. Okay. And look, guys, we're going to show you how to scale back your hedging too. You're always going to have some level of hedging in your portfolio. Okay. But we're going to show you how to dump some of the defense, take profits there, guys, on this $184,000 asset you had that started at the 15,000, right? And then guess what we get to go do with the fresh profits, guys? We get to go slam it right back into the long side. Okay. So this is the beauty of risk parity. Okay. And no joke, guys, that's just factoring in coming in with $100,000 with this setup, going into the worst crash that we've seen statistically since 1929. Look what happens. Okay. Talk about safety. So it's kind of neat to be able to see that, and it's interesting too because Bitcoin actually has worked as a little bit of a defensive hedge on some of the bigger down days we've had over the past quarter. Okay. So with that, guys, I'm going to hand it over to Jason. Just wanted to show you that example. That's the number one question we have from clients that don't understand risk parity, and I understand, guys. No one else teaches this stuff. Okay, and it's weird. You'll learn this if you go work at a hedge fund. You're not going to learn this from one of these hypey penny stock services or some hypey weekly option service. Right, they're going to teach you how to grow wealth long term, guys, and that's the difference of what we're going to do for you compared to literally every other person in finance that's a publisher.
Okay, now before we let you take a little pause there, Dean, tell everybody about this screenshot up here. I'm going to zoom in on the assets this client had, and then we'll zoom over to the profit he made. But this was literally, funny enough, this exact period of time we're about to enter into last year, where investors thought stocks only go up, stocks only go up, stocks only go up. And then we end up with this historic crash. And our clients feel like Superman during volatility. They really do. Tell them about Mr. Ron Steger's screenshot he sent you here.
Yeah, so really cool, guys. A gentleman named Ron had been looking for a really safe investment strategy for kind of years. He took our free trial. He really had a blast understanding really how to put his money in the safest structure possible. Okay, so he actually jumped in there. He used 584K. Okay, and during his free trial, guys, he was actually able to make a $97,019.89 profit. Okay. So as you just saw the Thinkorswim screen on my computer, you're now seeing it on Jason's, guys. And this was the screenshot that he sent us. And he texted me and he said, "Hey, Dean, profits look great. Call me so I can sign up." And so anyways, long story short, I look at my text message from Ron. It says, "Hey, Dean, check your email." And this was the awesome screenshot that he sent us, right? So it's so cool to see that. And I was like, wow, that's a record. And I had some people that had made 20 grand and 30 grand before Ron, but Ron made 97 G's. Okay. And it's really cool, guys. I just had more than 5 people that just made $40,000 during their free trial as well. Okay. So pretty cool. But neat. I think the best part of this story, actually, Jason, is not only the success that Ron had, but comparatively, his girlfriend with Goldman Sachs had over 3 million with him. That same week, guys, her drawdown was almost $1 million. Okay. And Ron was bragging to her about it, right? And we scaled back some of that defense. So he took his profits and he went and took her on a trip in Florida to basically, celebrate, because she's licking her wounds and he's having a blast. But that was the difference, guys. And that's what Goldman. I mean, financial advisors are freaking clueless on how to hedge risk. Okay. And I'm not kidding you. All the ones look, some of my best friends are financial advisors. They're smart guys. They're clueless on how to hedge risk. So anyways, that's a little bit of the difference, guys, of what our clients do compared to just being net long riding a motorcycle without its helmet on. Okay. And I just talked with the guy this morning, lost $400,000 in the last crash, right? And I was like, well, what'd you do for your defensive side? He's like, what's defensive? What is the defensive side of the portfolio? I said, oh man, you got to come to the webinar today. So pretty cool, guys. And so seriously, when you go to our website and you see on the testimonials page all these people bragging about making 100K in a day or in 2 days, look, they were just scaling back the defense during the worst stock crash since 1929. Okay. So pretty neat, guys. And look, that's what lets our clients sleep like babies at night.
I'm kind of scared to ask Jeff how much he's up now. Jeff, you out there?
Hey guys, yeah, I'm here. You know what? I couldn't do the math this morning because I was racing around driving and I had a dentist appointment first thing anyway, no, I haven't done the math this morning, and so I apologize. I just didn't want to do it while I was driving.
No worries at all.
Based on what Dean was saying in the beginning, I'm feeling real happy about it. Would you like me to begin my check-in at this point?
Tell everybody how you found us and your backstory.
Sure.
Yeah, thanks, Jeff.
This is a great day to tell the story because I did not know that this is when the slide started a year ago. I knew it was February, March, but I didn't know a date. It's a perfect date to tell my story, which really starts about back in 2008, excuse me, when I lost my job at the worst time guys could really lose their job. I worked in engineering. And I was paid out all of my stock holdings from a private company, and it looked great. But what it really did was light up the fact that I was very far behind on my retirement goals, and I was in my 40s. And I thought I better put this money into the stock market since I can't keep it where I was working. And so I had dabbled in the stock market prior a few years, and I thought I knew a little bit, but I went out and bought some financial subscriptions, and over the next decade, I bought a whole bunch of financial subscriptions over lots of different names, from the penny stocks to options trading to live webinars to the marijuana industry stocks, those portfolios, probably a lot of pump and dumpers, but what I learned was these guys aren't going to make me any money. In fact, I'm just going to tread water. So that's what I did for the next decade. Now I'm into my 50s and realize now you're really far behind on your goals. And then comes what happened a year ago. I took a slide down, and at the end, I'm an emotional trader, you should know. And so I don't like to sell. And so what I did was kept holding on to these stocks day after day. And for 2 weeks, every morning it only got worse. And at the end of the slide, I had lost 40% of my entire trading portfolio. And the reason for that is no one ever told me about hedging. All those subscriptions I paid for, probably $25,000 down the toilet, and no one ever said anything about hedging for risk, and so I didn't know about it. So what I did was I realized I'm in a big pickle here at this point, but I didn't know what to do. But I knew that I wasn't going to make money just leaving it in the bank, and so I went back out online and I found Portfolio Builder, and I found Dean. I talked to Dean, and this was like say almost a year ago. And they were telling about come to the webinar and hear about our strategy of how to hedge for these volatility. And so I did, and I enjoyed it tremendously. And so I bought into what is today's Safe Alpha portfolio. It would just be that first offer from the 7-day trial. And not only was I making gains, but what I liked the most, as nutty as it sounds, is I just like listening to Jason talk about the economics and politics and finances. And I'm kind of a nerd that way. I guess I spend too much of my time. And so anyway, I really enjoyed these webinars, and now I'm making gains like I hadn't made from other people. But I'm learning about risk parity and how to hedge against the next downturn in the market. And so I decided I'm going to put some more money. And I got to the next level, which is today's pro growth portfolio. It wasn't very long after that I started to feel like I'd found where the place I was supposed to be. And my gut said, this is where you're supposed to put your money. I started making these guys the signal, and the rest became the noise. And that's where I decided to go all in. And I got a boot camp. And I went in boot camp for life at that point. And so now I'm in all three portfolios, or all three, programs at the different portfolios. I'm learning about world news and economics and regular person speak. And I'm also learning how to hedge. And now I've made serious gains. And when I say I haven't done the math recently, I mean today, I have been flirting with making 100% of my losses back in less than a year. So I assume I've got to be right there today. I mean, let's just say I've recovered all of my losses from 10 and a half months ago, a year ago. And so today now I can really focus on moving forward. I can say there's not one penny I have invested in the stock market that did not come from Jason in any of these programs and portfolios. And I couldn't be happier. I'm not going anywhere. This is where I'm going to be for as long as I can. And I'm committed, and I'm happy to tell you of my story. And so thank you very much.
Well, it's a beautiful story, Jeff. So thank you so much. Okay, guys. So let's see. Quick shout out to the live crowd. Live, we have Victor, Samsung, PV, Martin, Kirk, John, Kurt, HKP, and Jeff Olson. So wonderful. Now, really quickly, guys, I want to make sure everybody can find the menu bar on the bottom of your phone or computer. Okay, so play with that. There's going to be an ability to unmute your mic, to raise your hand, and more importantly, to post in the chat box. And we're actually going to be offering a exclusive webinar only bonus to anybody who does participate in our free trial. And by participate, what I'm actually saying is we want you to try out the strategy during the free trial and show us that you're taking that action today. And so that's really the secret to how we've made this program grow rapidly. Dean has single-handedly brought on nearly 1,000, actually well over 1,000 clients in a year. And we do it by giving away the trading plan. So figure that. Free trial, we tell you what to invest in, that the same strategy all our clients are following. And then if you like what you see, you want to get the follow-up trade alerts and like Jeff said, the premium webinars, which are every Monday, Wednesday, Friday for our core portfolios. And then we actually have a very aggressive strategy, which is heavily invested in Bitcoin and different riskier frontier markets, which has been doing spectacular. And that's every Thursday. So what we're going to give you today is just the tip of the iceberg, but it's the seed. This is a seed we can plant into your portfolio, and you can watch it grow. And I believe you'll see that what we have to offer is superior to anything else you've seen. It blows me away, Jeff, that it sounds like you've bought just about every product that exists out there. And can you really tell me none of them were teaching you how to defend against downside risk?
I can really tell you that none of them ever talked about hedging for downside risk.
Wow.
And it's really, and I won't name names, but I have a big whiteboard up in the office, and I have all of my, really over the years. So I knew when subscriptions were going to expire and stuff. And I'll bet if I look across and see, I'm downstairs, but I'll bet you there's 10 or 11 that were on that board a year ago. And it's kind of an old board, but I'll let all those expire. But none of them said anything about that. I wouldn't even be here. The only reason I'm here is because I took the big crash. No, had anyone ever told me that before, I wouldn't have taken the big crash. I wouldn't have went on a search for something different, and I wouldn't have found Dean and Jason in the programs.
Oh, Edgar's on. We got to hear from Edgar too. Edgar, are you out there, buddy? Once we hear the 1-2 combo punch, it's pretty hard for people to resist trying out the free trial between the two of you. My job sure is easy here. Hey, Edgar, how's it going, bud? You out in Mexico still?
No, I'm back in US, but man,
those airports look packed. When I was seeing some footage of people trying to get out there, was it packed?
No, I travel by walking. I walk across the border.
Oh, okay.
Yeah, I walk across, and somebody picked me up on the other side, and then I go over there.
No, that's a good way to do it.
Yeah, the thing is that it's so cold down here in Texas that we hardly see temperatures of this nature. I mean, it's like 25 degrees this morning. Yesterday was about the same. So everything is frozen. Streets are a mess. So no internet, no water, no electricity. I just got the internet back. That's why I'm calling it a little bit late.
Jeez, what part of Texas are you in again?
I'm in McAllen, Texas. So it's way south. So we hardly see any of these temperatures on this side of the country. But hey, it is what it is, right?
Yeah, geez. Hopefully it doesn't. Hopefully it get the power back up for Texas here today.
Yeah, I hope so. Yeah, I just got internet, got power back this morning, but didn't get my internet just until now. That's why I'm calling it right now. So just checking here my portfolio right now. I'm barely turning my computer, and oh boy, this is good. This is good. Okay, folks. For the people that are on the call this morning, as I just mentioned, I just turned on my computer. I'm looking at the portfolio, the Safe Alpha Advisory portfolio that I set up January 29. That's 10 trading days ago, not including yesterday, of course, because it was a holiday. So 10 trading days, I'm up 13%. So basically what I did is I went ahead and sold all my stocks that I had on a Roth IRA, which was $100,000, and I put that money on the line to work. As I mentioned before in other webinars, I don't like pepper trading because the emotions are not there for me. And I need the emotions to be there when I trade. So I went ahead and put the $100,000 on the line on the Safe Alpha Advisory portfolio. As I said, 11 trading days ago, and my portfolio as of right now that I'm looking at it's sitting at $113,144 right now. So it's roughly 13 point something percent since I put my money on the line 11 trading days ago. So this is really cool for the people that are listening right now. You probably have been joining a couple times like I did. I mean, I've been listening to this guy since November, perhaps maybe earlier than that. But in November, I saw Dean put the $1 million portfolio that he set up with the Alpha Advisory. He did it live. I was there present, and man, that portfolio has gone from maybe 1 million to maybe 1.2, 1.3 million already. So
yeah, it's 1.36 here today, Edgar.
There you go. So there you have me in November. I didn't take action. December came by. I didn't take action. I was just looking at it from the sideline, right? January, towards the end of January, I said, you know what? I cannot wait any longer. These guys have convinced me. I really like the hedging the risk with the UVXY, the deflation hedge. And that's something that have blown me away. Like the Jeff was saying earlier, you can go buy a lot of stuff out there, but they never talked about hedging the risk. I mean, they kind of mentioned here and there, you have to be careful to not, gamble money that you need and this and that, but they never tell you, hey, you need to buy this specific ETF or this specific stock so that you can protect yourself in case you have a sudden crash. None of them do that. So, and of course, like me, many of you probably on this call today have 401ks, right? Or IRAs. And when we have a sudden crash, then, you go through the emotions up and down that you get a sudden hit, the 20, 25% crash, and you are not hedged. But with this portfolio that these guys are showing you here, you are always going to be hedged. It doesn't matter what happened in the stock market, you will always be hedged. And what I like about the UVXY is that it goes up, I believe it's 20x or something like that when you have a sudden crash. So I really like this. I'm protected. I can sleep well at night. And like I said, I just woke up this morning and I'm up 13%, since 11 trading days ago. So I think I've said it all. For the people that are on the call, do not do like I did. I waited almost 4 months to join. And if I should have, if I would have joined earlier, I bet that my portfolio would have been a lot higher. But hey, I'm okay with what I've done so far, and I'm moving most of my money out of the bank, which is just not getting anything there. And I'm gonna move it to my TD Ameritrade cash account, and I already did that. But I'm in the process of doing another transaction, and I'm putting all my money to work on this Safe Alpha and then other portfolios that they do offer. But in order for you to get those, you have to be a member. I just became a member, I believe, a week ago, and so I'm just learning the ropes. Watching some of the information they have in their website, and it's amazing, guys. So I'm telling you this because I told these guys to bring me on every day, when I can join, so that I can tell people that are listening to have the confidence and to hear from someone that's done it, put money on the line, and you can do it as well, because you're going to see the benefits. And what I like the most is what I just said. I can sleep at night, and I'm not worried about, if there's a sudden crash, something happened somewhere in the world, I'm going to be protected. So listen to what these guys have to offer to you today, and at the end, just make the wise decision.
Now, Edgar, have you been compensated in any way to share your story?
Not at all. I ask you guys to bring me on so that I can tell people to do it and do not waste more time.
Thank you so much, Edgar. Thank you so much.
Yeah.
Okay, very good, guys. So again, we're going to go through the strategy. First, I got to convince you that, hey, Edgar made money in the past. Jeff's been making money with us for about 10 months. Will it work in the future? That's really the job today, is to give you the confidence that not only is past performance wonderful, what could the future entail. Okay, now quick disclaimer. It might be hard to find them, but we do have to disclaim that for every positive testimonial, there could be an equal and opposite testimonial out there. Future performance is not guaranteed by past performance. Okay, so with that said, let's talk about why this product's so popular and why our clients do tend to get the exact same results over any given period of time, which I know is just mind-boggling because in the past, every advisory we've ever seen, you cannot get the same result as the guru. As hard as you try, what you notice is they put out the trade when you least expect it. Everybody rushes in and the price gaps up. By the time you get in, you're paying nose-bleeding prices compared to the guru. And then the next thing you know, it's being sold and it's falling off a cliff. So you end up buying high and selling low. So with our program, that just does not happen. And I think one thing I did fail to do with Edgar and Jeff here was ask them how many trades they had to put on. In fact, are you guys still out there? Let's see, Edgar and Jeff.
Yeah.
Am I keeping you
Yeah, I'm
busy?
here.
Am I keeping you busy with a ton of trading?
No, not at all. I like
Not
to
at
tell
all.
people it's not the number of trades that should really count. You should count the time spent doing the trades, which is really minimal. And sometimes I spend more time logging in than I spend making the trade. So
That's right.
Yeah, very little trading. So less is more over here. Okay, brilliant, guys. Thank you so much for telling your story here. All right, guys. So if you're watching, this is how we do it. This is the trading plan. This is what we email to you daily. Every single day, you're going to get an update. 9 out of 10 days, the update's going to say no changes, relax. You are set to jet. Let the portfolio do the work for you, and then join us live on the webinar. So I can essentially what I like to do is give you forward guidance. Most of our premium webinar time is spent with me predicting the future and anticipating how this will affect markets, so that you're going to know weeks, sometimes months in advance the trade I'm anticipating. So you have lots of time to go research that ETF, do your due diligence, think it through. And then by the time the trade does come, everyone is really prepared. Also, we're only trading multi-trillion-dollar markets. The following portfolio, you got to realize the crash insurance deflation hedge, UVXY, is a $3 trillion market. It's extremely liquid. Okay, the triple Q is playing the NASDAQ. Gosh, that thing has flown up to a $15 trillion market cap, just complete dominance in tech. Okay, Bitcoin in the crypto space is marching its way over $1 trillion market cap. Now, that's a small position. In fact, that one is making our clients so much money, we just cut it in half. The profits were too hard to turn down. So we did capture a lot of those profits. We still have a small Bitcoin position. Okay, copper is one of the largest markets in the world for commodities. This is our inflation hedge. So if you think about it, what could go wrong for all these big tech giants? What could possibly go wrong? And I'll tell you exactly what's going to go wrong. Without question, they're all going to run out of resources to build all these electronics. Okay, you can see this problem coming a mile away. Okay, so it's very simple. We got to buy the resources that the tech giants require, which is primarily going to be held in the copper miner ETF, COPX, and then the rare metals ETF. And actually, we get headlines that China's threatening to cut us off of all these rare metals. So REMX is a beautiful play for that, which is going to get you exposure to, for Tesla, you're going to be really interested in the exposure to lithium. And for Apple, you're going to be very excited about the exposure to cobalt, okay, which are two metals which are clearly going to create some supply chain issues. And so, again, this whole portfolio is very sophisticated, looks simple, but every asset is designed to protect one core position. And that one core position is our investment long-term in the fastest growing companies who have created monopolies worldwide. So we're going to come back to this screen after I give my presentation, And I'm going to start punching in the numbers you guys post in the chat box. So what I really want you to do is find that chat box, because to get our special exclusive webinar only deal, you do have to participate. Okay, you can sit there and watch, but like Edgar said, not only is watching not going to put money in your pocket, paper trading doesn't have the emotional roller coaster. I really love that, what Edgar was saying, that paper trading is for pansies. It really does not put the emotional aspect into your trading. And that is critical. I really, really found a lot of value in what Edgar had to say there. So yeah, we really want you to find the chat box, post in it how much money you want to test drive. Okay, so whether it's 10 grand, 20 grand, 100 grand, if you post that in the chat box, I'm going to come here and punch this into my calculator. It's going to divide the total investment by the unit cost, and then it's going to calculate out exactly how many shares to invest. Okay, so if you post in the chat box your name, email, phone number, and how much money you want to test drive, after I've gone through the explanation of our strategy, I'm going to screenshot that and email it to you. And we're going to add you to the text message alerts. So you'll get to know every day, is Portfolio Builder worried about a crash? Should we be increasing our hedge? Or is Portfolio Builder more worried about inflation? Should we be upping the ante in the copper and rare earth metals? Is Bitcoin about to double? Okay, so these are the type of trade alerts you're going to get. And you're going to get updated daily during your free trial and daily once you become a premium webinar. Now, again, I'm just going to give you the tip of the iceberg. We're going to plant this seed so that you can grow your garden. Okay, this is really a garden we're teaching you how to build. And again, if you do build your garden, let's say 10 years from now, you want to pull out some of your profits. Well, you simply say, hey, I want to pull out 10 grand to pay for whatever. And again, we're going to get you out the same way we got you in, balanced. We want your portfolio to constantly maintain a ratio of these ETFs, which are designed to protect and grow wealth. Okay, so once we go through this presentation, I think you're going to find it funny. I'm going to spend very little time talking about stocks to convince you that this portfolio is going to absolutely dominate for the next decade. Okay, so I think you're going to be very surprised by the content we're actually going to go through. That's going to make you know for sure this is the strategy you want to employ for your retirement. And that is our niche. Our niche is 50-plus-year-olds who are either in retirement or going into retirement, which really puts you in a special category. Not only do you no longer have a high level of income, which means you really can't be very risky. Okay, your time horizons also really has to be carefully planned here. So with our clients, safety first. Okay, safety first. Nothing else matters besides protecting capital. After that, we'll look at the low-hanging fruit. What's the safest way to make money while protecting capital? And you're going to find really quickly that means everything you've ever learned probably needs to be thrown out the window. Unfortunately, all the advisories we've seen out there are obsessed with trying to outperform the stock market, and they end up taking extreme risk to do so. So we're going to show you how to really whip the returns of the stock market. That's easy. But what's hard is to do it safely. Okay, and so that's what's going to really make this program stand out, is the safety net that you will have at all times. Now our hedge is going up with stocks today. It's up 2%. Absolutely hilarious. This actually could be a pretty extreme warning sign. So it's not typical that your hedge, your defense, goes up with the offense. And that's actually happening for our portfolio today. Let's take a look at our returns, Dean. This is almost comical. Safe Growth Pro. So we have 4 products, and they're all designed to hit a different return with different levels of risk. What I would tell you is there's no free lunch. Okay, if you want to make less money safer, I'll show you how to do it. That's our Safe Growth Pro, which is loved by anybody with over $500,000, especially if you have over $1 million. It's up 25% year to date. And in February, it's already up 8.4%. Okay, and it's the most conservative bearish strategy we offer. And it's very popular with very wealthy clients. Okay, so good job on that portfolio. But the other products we offer are Safe Alpha, which is the current program. This is if you have desire for medium risk. Okay, so for us, medium risk is extremely safe compared to anything else out there. It's up 16.7% in February. In our boot camp, we have 2 bonus portfolios. One is aggressive, heavily invested in fracking, medical marijuana, Bitcoin, solar panels, and tech stocks, plus a huge hedge. It's up 16.6% in February and had a 7.5% return in January, 16% in December. This is actually going to be the bonus you're going to get if you do upgrade to premium, if you take part in this free trial today. And then I have a super high risk strategy, which again is meant for very small amounts of capital. This thing returned 127% in January and 16% in February already. Okay, so that's going to get you into things like Ethereum and actually a handful of mining companies that are not held in REMX, which are going to be critical to the supply chains for Tesla, who's about to run out of nickel and lithium. And this is going to be a big story in the next year or two. Okay, so anyways, let me jump into it again. The freebie today and during your free trial is Safe Alpha. This is right in the middle. This is our most confident portfolio that 99% of retirees are really going to do a great job with. If you do have over $500,000, Dean's going to throw in a pro bonus for you. We're going to take the same concept, make it way safer. And if you're really below 100K, the boot camp makes a lot of sense. You've not saved enough and you need to go for some bigger returns. That's why Jeff is up almost, I think he's up 100% from where he started since he followed our program. And he's been very invested in the boot camp. Okay, so let's go ahead and jump into it. Let me walk you through how to read this, and then we're going to go through the presentation. And looks like some people are already finding their chat box. Kirk is ready for a 10,000 portfolio. Samsung says, thanks, Edgar. Thanks, Jeff. Okay, very good. Let's all start posting in there what you want to test drive, because once I get through this, I'm going to go from top to bottom and start getting your screenshots out. So, okay, how do we do it? 17 shares of UVXY, 7 shares of the TQQQ, 1 share of GBTC, 6 shares of Copper Miners, COPX. John just said he's going to do 100K. Very good, John. And 1 share of REMX. Okay, this is the strategy. We have a defense and an offense. Okay, we chose these names because everybody understands football or sports. Okay, defense in our mind stands for deflation. That means the economy is slowing down. Okay, this means stocks are likely to fall off a cliff. That's UVXY. That's your hedge. Okay, we're currently at a 13% hedge. If we get an epic crash like March, you're going to make more money than you know what to do with. And if I really thought we were about to fall off a cliff, guess what your trade alert would be that day? Increase UVXY and sell a little bit of the offense. Okay, but actually what we're anticipating is a melt up right now. Okay, and we'll talk about what the key risks are in the market and why the hedge is critical at all times. But that's what defense stands for. Now, during a period of quantitative easing, we're going to find that's the only smart way to hedge currently. I'm looking at a few additional defense plays coming in the next 3 months, which are going to be beautiful. But right now, UVXY is your best bet. This is where we're anticipating the most profit for the longest period of time. That's in the growth stocks. Now, I'm going to tell you what I have to offer with the TQQQ will outperform any stock portfolio you have 20-fold, 20 times. Even if you own the same stocks individually that are in this ETF, I'm going to show you without question, this will outperform what you're doing with your stocks. Now, because it is leveraged 3 times, what you're going to find is it allows us to only place 60% of the total portfolio into this asset. And then the rest can be designed to protect against risk. I'm going to tell you there's 3 key risks. One is that the economy slows down, that the bankruptcies from the lockdowns start to really tell its toll on the world economy. And as governments start to slow down stimulus, this creates a deflationary impact. It could also be rich billionaires just messing with you. selling 1% of their capital, creating a volatility event. Who cares? It really doesn't matter. As long as stocks go down, UVXY screams higher, about 10 times faster than stocks go down. So it allows you to be just above a 10% hedge and have absolutely nothing to worry about. Okay, Kurt's coming in with $500,000. Very good. Okay, Kurt, we're going to get those screenshots out in a minute. Now, Kurt, would you rather test drive the Pro since you're starting at such a large account size, or you want to start off with Safe Alpha? And I'll give a teaser of Pro at the end of this. Okay, the NASDAQ, we're going to go over. If the dollar completely gets collapsed, which is a real risk, look at your government. Look at what they're doing to the dollar. Okay, that's a real risk. Now, a weak dollar is great for stocks, but if you get a catastrophic default in US Treasuries and thus the dollar, Houston, we've got mega problems. So the Bitcoin hedge is brilliant, and that's why big money is quickly racing to get exposure to Bitcoin. It's a brilliant invention, it really is. Now, the problem I see that I believe will be the more likely problem coming up is going to be rising interest rates on the bond market, which is due to exploding prices in commodities. So we're very aggressive long oil in the Pro. For Safe Alpha, we did choose the assets that are more related to the tech giants. So the tech giants' real risk would be the price of metals rising too rapidly, which they use in all their goods and services. So we're long copper, minor, and rare earth metals to hedge against inflation, which is probably the bigger concern for the next 2 years. Okay, so you put it all together, this is an uncorrelated basket of 5 ETFs that protects you against all key risks. Okay, so let's jump into it. We're going to come back, we'll build out some screenshots. Let's just talk about the 10,000 foot overview. Step one, stop picking stocks. Okay, you're too old. You've got 1 to 2 decades to worry about. Okay, picking the next Amazon is a young man's game. It's really a venture capital game. Okay, we don't need to do that. We just don't need to do that to make great returns. Let's park our cash where the billionaires are. Okay, and the billionaires all have their money in the same place. All of them primarily own this group of 10 stocks, which are held in the NASDAQ or the QQQ. Now, again, we don't like the QQQ. We like the triple Q because it frees up capital to build your defense, your inflation hedge, your dollar hedge, and your crash insurance hedge. Warren Buffett's basically all in on Apple with a inflation hedge with Bank of America. You're going to see, if you look at his strategy, it's very close to ours. Okay, you got Bill Gates, Microsoft, Jeff Bezos with Amazon, Zuckerberg, Facebook, the Google twins, Elon Musk with Tesla, who also formed PayPal. We got the fastest growing chip producer, NVIDIA, and then Comcast has a monopoly on the internet. Okay, this is really the safe place to park cash for the rest of your lifetime. No question, this is the safest place. Why? Okay, first off, they are growing profits, total gross profits faster than any company in the world. Are there companies growing their growth percentage faster? Maybe, but guess what? These guys will buy them out before they become any danger to their business model. Okay, so these guys are growing revenues, total gross revenues faster than any companies in the world. What's next? They're buying back their own stock. That's really what we care about. They have the most money every quarter to buy back their own stock. So get this, while Apple is growing profits and revenues, the board of directors have decided the best use of the profits they generate is not dividends anymore. That's done. That's so old. The best thing to do with profits in this day and age are buy back outstanding shares. So if there was 100 shares of Apple 5 years ago, today there's only 75. So this is really the only asset in the world that's shrinking over time. Let me repeat that. This is the only asset in the world that's actually shrinking over time. And once we realize what the governments worldwide are doing to the dollar, you're going to realize, wow, now I get why stocks go up. It's because on one hand, the dollar's being diluted, and on the other hand, these massive monopoly companies who are growing profits faster than anyone else on the planet are sitting there with their profits and they're burning the outstanding shares. So the shares become more scarce over time. So you got more dollars fighting over a limited supply of goods and services in an economy on one hand, and that's going to be an easy prediction that the US government's going to continue to dilute the value of the dollar. Okay, on the other hand, you've got the biggest, baddest companies in the world reducing outstanding shares. Okay, so you put those two together, and I think it becomes pretty easy to predict what's going to happen to the future value of these companies. Of course, they're going to go up. Okay, so I said I can outperform your portfolio 20 to 1. Let me prove that to you. Now, first of all, I want to point out which decade has a better return on the NASDAQ? Coming out of the dot-com bubble or coming out of the housing crisis, and why? Okay, so obviously the most recent decade smoked the previous decade. Why? Did these companies really grow their companies more? I'm going to tell you no, that's not why. We'll come back to that. It's really important. We want to know, will the next decade outperform this decade just like the current decade outperformed the previous? And if so, why? What is causing this to melt up? Is it Apple really creating revolutionary products and growing profits at an exponential rate compared to the previous decade? No, I'm going to tell you, actually, their growth is slowing down. Sure, it's great, but it's not like the growth they had from 2002 to 2008. So we got to really ask ourselves, why? Why is this happening? Now, if you had bought perfectly 2010 after we had the housing bubble crash and we went into QE and it already had this massive rebound to right here, okay? So you wait for the crash, you wait for the Obama administration to bail out the bankers with $1 trillion, and the central bank goes into $1 trillion a year of QE. That's what's important. You're buying the NASDAQ at an all-time high. You sit back, you do absolutely nothing. You turn $1 million into $5.9 million today, almost a 600% return, or $1,000 into $6,000. Not bad. You smoked every hedge fund out there. It was one of the best returns or trading decisions you could have possibly made, is to buy the NASDAQ or the QQQ at all-time highs 2010 after seeing what was happening to the dollar, after seeing the government start printing money. I'm going to tell you the secret is to predict the government. You predict your government, you're going to predict the stock market easily. Okay, so let's talk about what happens if you bought the triple Q. Now, the triple Q is going to take every $1,000 you wanted to invest in Apple and Microsoft, and they're going to triple it for you at an expense ratio of 1% a year. So you just can't borrow that much money at 1%. That's what the triple Q is going to do for you, but it's not going to increase your return 3 times. This is going to increase your return 20 times. So that same $1,000, instead of it being worth just shy of $6,000, is now worth $116,000 today. In other words, if you had invested $1 million in the triple Q in 2010 at all-time highs and not worried about it, not worry about the crash in 2018 nor 2020, do nothing. Just buy that one stock and understand the big macro picture and sit back. And you turned $1 million into $116 million today. Phenomenal. And now we're going to add a hedge that skyrockets at 10 times the pace so that you have nothing to worry about when there is volatility. That's UVXY. Now, Pro had a huge return in January because it has twice the hedge at all times. So if you are worried about these price levels, Pro's probably a better bet. It does double the hedge nearly. It's got about an extra 10% on the hedge currently, and it's still up 8% this month and 16% last month. And so here's what really matters, and Dean did a great job, but if stocks go down, UVXY screams up at a faster pace than stocks go down. In fact, the faster stocks go down, the better it is for UVXY and the more money you'll make. So let me say that again. if stocks fall off a cliff, the faster the better for our clients. We would, I hate to say it, but if stocks did crash 30% like March, our clients will make more money than if they continue to melt up in all portfolios, every single one. Okay, so our clients not only like stock crashes, they look forward to them because they know what happens. What happens when stocks crash? Governments freak out. Billionaires freak out. The banks freak out. All of their money is tied to the stock market. So they immediately go spend trillions of dollars they don't have to bubble up financial assets. And they're going to keep doing it until they break the system itself. We'll talk about what would break the system. But bottom line is our strategy is to simply sell UVXY every time there's a significant crash and buy more stock because we know what the government's going to do. They're going to go spend trillions of dollars that they don't have, dilute the dollar further, and pump the stock market back even faster. Edgar says, that's why I like these portfolios. The risk is always hedged. That's right. Okay, so again, you own Apple, Microsoft, good for you. Triple Q is going to outperform you 20 times. 20 times faster growth. Okay, we'll come back. All right, so now I'm going to talk about nothing to do with stocks. We're going to focus on the government and understand why that is the secret to predicting the markets. This is the US federal deficit. Okay, now what do you see? You see that our spending is falling off a cliff. Okay, John says, even if every single long position crashes, you'll come out unharmed. We'll turn a profit, John, without touching the offense if we get a significant sell-off. Absolutely. At 13%, you're going to make a huge profit. Probably about a 30% total return if you get a March-like event without touching the offense. Now, if I get you to a 20 to 30% hedge, we could actually double or triple your net worth without losing your long positions, without realizing gains. We're just going to let that offense ride because you never know. You really never know exactly how bad a crash is going to end up being. Okay, but yeah, if we have over a 10% hedge, you have nothing to fear. If we go to a 20 to 30% hedge, we can double or triple your net worth while remaining long on the offense, no touching that offense. Okay, so this is all that matters. If the government, you got to think of the US government as the largest corporation in the world, and it has a monopoly. The product it creates is the dollar and the bond market. And what I want to really stress is if the government's doing a good job at running the company, this line is going to be pointing up. We're going to actually be creating a surplus. We're going to spend less than we make. Common sense, right? Now, if your government is failing at its job and doing a poor job at running it as a business, it's going to be spending more money than it makes. And so what you really need to understand about the state of the American economy and its government and its leadership is that regardless of Republican or Democrat, they've had one pattern in common, and that is the ability to double the national debt every 8 years, every 2 terms. Okay, this is bipartisan. Okay, bipartisan. And it's because they're in a debt trap. There's no way out. There's no way out. The voters are to blame. They're uneducated. They have no clue what they're voting for. And it's creating a detrimental long-term situation for America. It's really sad. And I can promise you the next decade will accomplish the same as a previous decade. And so remember, we were wondering, why did this decade outperform the previous decade? It's because they did what I just said. Okay, we doubled the national debt. So again, you got to realize that means the amount of money being diluted into the dollar doubles every 8 years. That's exponential growth. So that makes the stock market grow exponentially, or in other words, faster over time. In fact, it's not just doubling at 8 years. We may double the national debt in around 6 years this time. So it's actually hyper exponentially growing, falling off a cliff. And you tell me, do you hear the Democrats talking about balancing the budget or trying to have austerity for the dollar? Oh no. $2 trillion deal coming through. They just did $1 trillion in December. They just did $3.5 trillion last summer. Janet Yellen saying we cannot repeat the mistakes of 2008. Okay, so all they do is talk about ramping up spending. Next is going to be climate change. They're going to put a $5 trillion infrastructure deal through so we can go build solar panels. So it's like it or not, that's not my job to like or dislike the government. My job is to predict the future. And I'll tell you, the future is going to be lots of freebies from the government because the voter base demands it. They will kick out any politician who cuts off the freebies. That's the reality until they break the system itself. And I'm going to tell you, they're a long ways from breaking the system. So now is the time to make some very easy money because predicting the future is very easy. The US government has promised $100 trillion of future liabilities spread out between Social Security, income security, health. Okay, military complex is not going away. That defense budget will grow like clockwork. Medicare, veterans benefits, get this, for every dollar the US collects, 10 cents is interest. It's going to get worse. And that's actually really important. We cannot overlook that right now the US government has to spend, for every dollar it collects, 10 cents to its sugar daddy. Who's the sugar daddy? Everybody who owns our debt. Okay, we're operating like a medium risk credit card and we're on the verge of going to a high interest rate credit card. Okay, the fools in control of the US government for the last 4 decades have been operating this like a credit card. Insanity. Okay, corporations are getting debt for and managing their debt levels at nearly 1 to 2% levels. The US government's running its business with 10% interest. And it's on track to double the debt. Okay, we got $28 trillion of debt. It's insane. It's absolutely insane. It's spiraling out of control. Okay, so as long as you can predict this trend will continue, I'm going to tell you, stocks are going to climb higher. Now, is there going to be volatility? Sure. That's why we're going to cash out UVXY every time they fall and buy back stocks with a big grin. Okay, and we'll talk about what would change that mindset. If we go down to, this is straight from the Treasury, by the way. This is not some sheet I made. This is, government has the balls to publish what they're actually doing. These brown lines right here represent your dollar getting crushed. Okay, now I'm going to tell you, these little lines are big. Those are huge. That's hundreds of billions of dollars we're printing out of thin air. Let me ask you this. Do you think productivity and wealth are created from printing dollars? Or do you think creating goods and services creates wealth? I go with the latter. I don't know about you. What we did right here is historic devaluation. That's about, for every dollar that's ever existed, we just printed 30 cents. So we devalued the currency or diluted it by 30 cents in 3 months. That's after a century of our central bank really being formed. Okay, if you go back to previous centuries, Americans have gotten wise and they have cut off these schemes. Okay, until the American voter base wakes up to what's being happening, that they're getting robbed blind by the rich. Well, this is going to continue. And if you can't beat them, you better join them. That's really the true message today. So that's the big picture. Let's talk about how these super rich sneak money out of the government to bubble up financial assets. So you get the 3 branches of government to come up with a spending package. Completely Democratic controlled now. Kamala Harris is that swing vote. As long as it's a partisan package and you get all the Democrats to agree, they can pass anything they like through the Senate. And you better believe they plan to do it. Okay, they plan to do that. They are right now. Once you pass that, you go to bills, notes, and bonds. This is the Treasury auctioning. Okay, so this week you can count up, they're going to sneak a good $180 billion out the door this week. That's a light week. Usually it's over $300 billion a week they want to sneak out the door. Who buys all this debt? Where does the money come from? Who would actually want to lend money to the US government at this point in time? So, well, here's who has to buy it. It's called primary dealers. And They have a pretty cool deal. We're going to walk through that. JP Morgan is the primary buyer of US debt, and they have to buy all of it. Anything that's not purchased, these guys have to pick up the tab. So the government and the central bank are in on this together. Whenever the government wants to blow out its spending package, the Fed puts interest rates at 0. So this means JP Morgan can go borrow unlimited amounts of money for the sole purpose of buying US debt. That's the only thing they're allowed to do with it at 0%. So they go borrow at 0%. They go buy up all of these positive yielding bonds, and then they go sell it to whoever's foolish enough to buy it. So it's central banks who do need dollars. It's pension funds who need the deflation hedge, TLT, okay, bond market, which we do not believe will provide that value today, to be clear, which gets sold to broker dealers who resell it to small folks. Here's where the magic happens. And this is when we're basically issuing too much debt. Nobody wants to buy it. That's when central bank balance sheets grow. That's when the dollar gets diluted. And so right now, about a third of all debt is being purchased, monetized by the central bank. So we are still getting away with selling 2/3 of it, okay? And we'll talk about why anybody's buying it in a minute. But bottom line, that's likely going to grow. I'm anticipating pretty soon we're going to be monetizing closer to half, maybe even 2/3 of all our debt, which is scary. But anyways, if you like the return of 2009 to current, realize it was really because we did $1 trillion of dilution of the dollar every year till 2015. Now, I know stocks went up from 2016 onward. So you're probably wondering, well, wait, I don't see any growth of the balance sheet there. But hold on for a second. A lot of people would say, that's all Trump, tax cuts, that's why stocks went up. I'm going to say, hold on a second. Tax cuts are great. It drives earnings per share up, but that's not what drove stocks up from 2015. I'll show you what did it. Let's look at Europe. Okay, so wait a second. Right when the US stopped printing money, the Europe Central Bank printed $2 trillion. Wow. And during this crisis so far, they've printed about 2.5. Now, what about Japan? Interesting. Right at 2015, they started printing money. That's funny. Several trillion of it. Okay, what about China? Oh yeah, China nearly crashed their entire real estate market in 2015. They've been the fastest money printer in the world for the last decade, or at least the last 7 years straight. Okay, they've actually printed a value of $34.4 trillion worth of the yuan. It's absolutely insane. Okay, so that's actually what's driving stocks up. So let's go back to this. So if we can predict that world governments are going to continue to dilute their currencies for the next decade, and that they will do this faster than they ever have before in history, you got to ask yourself, will the next decade's return be good, or is it going to be better? I'm going to tell you, it's more likely to be better. Okay, so we're not just anticipating a 10,000% return over the next decade. It could be historic. This could be probably the best decade in stock market returns in history. And it's for all the worst reasons possible, which we just covered. Okay, so what does this all mean? The dollar has lost 99% of its value for the last century. Okay, all this innovation, technology, automation, AI, what has it done for the common man? It's made the value of their living, their labor, their income get crushed every year. The only time the dollar's gone up in value was during the Great Depression, when Europe was in a decade of decline because they're trying to get reparations from Germany, which eventually caused Germany to collapse, to hyperinflate multiple currencies. That's the only time the dollar's gone up, and it led to World War II. Okay, not fun times. The rest of the history of the dollars, it's been crushed. Okay, and it's causing everything. It's not just stocks going up. I'm only going to show a few of these, but just look at anything. Medical care is going up. It's up 550% since the 80s, even just to keep electricity on. And this is going to get way worse. With climate change as the main global agenda, they're going to make the cost of energy skyrocket. They're going to drive electricity and all sources of energy skyrocket because they're worried that we're going to create a catastrophic event to the climate. Now, again, it's not my job to have a personal opinion on it. My job's predict what these global elite are going to do. And I can tell you what they're going to do. They're going to make the cost of everything skyrocket. That's the plan. And they do this by printing money at the government level. So look at electricity up 1,000%. Where's all this innovation? Efficiencies, automation. No, it's not for the poor, it's for the rich. Now, the CPI that the Fed talks about would tell you there's no inflation. We all know that's BS. The real inflation is over 10%. The things we actually buy are going up at rapid pace. If you've got $1 million today, watch out. You wait 5 years, it'll have a purchasing power of $500,000. Okay, we're expecting 10% loss per year for anyone holding cash. Okay, so that's the stark reality. Now, here's what the Fed reports. Okay, they use this core inflation rate. And what's the latest print? It's coming down. Okay, that's deflation. So it does look like the economy is really struggling right now. The only reason it's stayed alive is because income has actually increased while everybody's been laid off. Is that funny? The government has made the income of everyone go up with all these government handouts. What's going to happen when they pulled the juice bowl away? Well, it's going to collapse, and then they're going to have to spend even more. Very easy to predict. So the Fed's told us what they're going to do. They're going to wait for this specific measurement, which is total loony toony measurements. Okay, I want to be clear. This is total loony toony measurements. But this is what they operate on. And they've told us they want to get it to 2.5 and run it hot to 3 for as long as it's been below. They call it symmetrical inflation. Why does the Fed want inflation? Well, here's the deal. If you believe as a consumer that the cost of goods will remain flat or go down over time, are you going to be urgently buying anything? No, you're going to wait. You're not going to buy anything because you believe that the cost will be the same or better in the future. Do you think that's going to make an economy really spin? No, it's going to cause an economy to freeze up. So that's why they're so obsessed with creating inflation. And over time, they realized if they stop this money printing, the whole system will crash. So they continue to tweak the formulas so that they never stop printing money. So it's really bizarre that this is the world we're trapped in, but it absolutely is. So until they get this inflation to 2.5 and run it hot to 3, for as long as it's been below 2, we really want to bet up on stocks, bet up on scarce assets like commodities and metals, and hedge in case stocks ever go down with UVXY. Okay, it's not until we do get red hot inflation that we will change our strategy dramatically. Now we go back to World War I, World War II, when we had GDP crashes of this size. It took half a decade to recover. I believe what we've done worldwide will take 5 to 10 years to recover. It's going to be a long, slow recovery. So bottom line is I'm not anticipating inflation to pick up very quickly. Because the government is not effectively spending money. It's not creating a highly efficient economy. And think about it, it's paying people to sit on their ass and do nothing. Okay, that is not going to create inflation. So anyways, premium webinar, we'll talk all about this. Bottom line is until this gets to 2.5, this strategy is going to kick ass. All right, let's look at a few more charts. Here's the dollar against the euro. Just the US is losing money faster than anybody else, which makes our stocks go up the fastest. Funny how that works. Now, what do you think Europe's going to do if the euro gets too strong, which is really what DXY measures? Well, guess what? They're going to print money faster. They don't want their currency expensive. Nobody wants a strong currency because it kills your exports. So expect Europe to increase QE and make stocks really bubble up. Okay, the yuan's the same picture. The Chinese currency is super strong right now. They're going to probably ramp up spending as well. So bottom line is we're in a currency war. That's why we like Bitcoin. Okay, here's why you don't want to own bonds. Here's the TLT. We predicted once they went into QE that exactly this would happen. Now, if you saw that screenshot where we made Ron Steger 96 grand in a week, it was the TLT. That was the hedge that worked before QE. Now it won't work. Okay, it's not going to work for a long time. We're actually ready to go short the treasury market. if it gets a nice bounce, which we've been waiting for. But the other side of that trade is to bet up on commodities, rising rates. So we've been killing it on that, obviously, with copper and rare earth metals. And if you're in pro, we've been long oil since it went below zero. That's been one of our best returns. Okay, so bond market's a leveraged bet on the future value of the dollar. Look at your government and you tell me if you think the dollar is going to go up or down with the policies. Okay, if you think up, good luck. Good luck. Look at the voter base. Are they going to vote for a strong economy? Or are they going to vote for a bunch of free crap? Okay. If they want a bunch of free stuff with no work, do you really think that's going to create a highly efficient economy? Remember, the government is a company. Its product it produces is the dollar and its debt. Okay. And this chart tells it all. If the government's doing a good job, this is not pointing straight down. Okay, if the government's doing a good job, it's going up. It's balancing its budget. It's trying to spend less than it makes, not the opposite. So what does that leave us with? Let's talk about some risks. So the big risks out there is one, we really haven't allowed the economy to run on its own feet. The second, the government and Fed try to do that, probably going to get a crash, which we'll react to by selling UVXY, buying more stock, and predicting the government's going to go in with more stimulus because that's what they do. Next big risk is interest rates on the bond market going higher than the junk bond market. Because interest rates are so low on US debt, because we're manipulating them lower to borrow tons of money we don't have, we're coming to a point where all of a sudden the bond market will pay a higher interest rate than the junk bond market. Okay, that's a huge risk developing right now. We're on top of it. Okay, we're on top of that for you. That's something I'll tell you all about in the premium webinars, but that's going to be quite an event. At some point, junk bond investors who are getting 4% a year are going to switch over to long bonds. And that's going to be quite an event. It'll probably force the Fed to start gobbling up more junk bonds. Okay. And then the third risk is that the price of oil and metals go up too fast, which slows down demand. If prices go up too fast, obviously that slows down demand. So here's that oil just skyrocketing up. We're prepared for all of this. Look at Dr. Copper. Copper's at nearly an all-time high price. Why? Because we've printed money everywhere. Now it's finding where to go. So we're long copper miners and RAMX. Beautiful plays, just skyrocketing. We're long Bitcoin, and we're keeping a close eye. I'm going to tell you, this is your worst nightmare right now, is the bond market is beginning to spiral out of control. And it looks like the central bank loves it. They want these rates to rise and create an event. I believe that our central bank is purposely letting interest rates skyrocket so that it does create a short-term crash this year, which they're going to use as an excuse to come in with a multi-trillion climate change infrastructure project. That's when the government loves to sneak in these multi-trillion-dollar deals, when we're all panicked. And the best way to create this event is let interest rates just skyrocket, which are happening. So we pay close attention to this. Now, what would change my opinion about how to play these markets in the long run, instead of just cashing out crash insurance and going long? It's going to be once we get hyperinflation. So the 1970s is the period you should be worried about. You see that core inflation going all the way to 12%. I believe we're 1 to 3 decades away from that. So until we hit those 2.5%, 3% inflation rates, it shouldn't even be discussed. Okay, the efficiency of the government's pathetic. So more likely is we're going to have the best stock return this decade than we've ever had in history. That's the most likely outcome. Will there be volatility? Yes, but we still haven't done the $5 trillion climate change infrastructure blowout deal. Okay, right now we're going to be running on the $2 trillion deal that's coming out right now. So bottom line is we understand the risks in the market probably better than anyone else out there. We're going to protect your wealth. If we get 1970s like inflation, I've got your back. Okay, that was a 15-year bear market. Imagine you were going into retirement in 1965 and you ended up watching your wealth get destroyed 75% for almost 15 years. And then it took 30 years to get back to even. You do not have that kind of time on your hands. So I've got your back. If that happens, we're ready for it. But I want to stress that's not the most likely outcome right now. Right now, we're seeing inflation fall as far as how they measure it. So that means more fun for Janet Yellen. She wants to go spend $2 trillion in stimulus every 3 months because she says Ben Bernanke made a huge mistake. He did not spend money fast enough. Okay, so that's our presentation, guys. Let's build some portfolios. Remember, if you post in the chat box how much money you want to test drive, Dean's going to give you a special exclusive deal only available to webinar attendees. Okay, so let me go ahead and zoom out to my chat box, and we're going to go from the top down. So we already have people posting in the chat box what they want to build out. Okay, Kirk is first with 10K, so I'm going to go punch in 10,000. Screenshot that. Okay, now let me make sure we got Kirk's email and phone number. Now, Kirk, if you're still out there, make sure you posted your phone number for text updates. Okay, John's coming in with 100K. Let me get John his 100K screenshot. Now, John, let's make sure we got your info. John, okay, John got his info, very good. So that way he gets his trade alert updates, phone number and text. Okay, now we have Kurt coming in with 500,000. Now, Kurt wants to try the Pro, which I'm happy to give him during his free trial. Probably makes a lot more sense for him. Kurt, Pro is killing it, safer. So same strategy, folks, but just notice it's got a bigger hedge. If we get a March-like crash, this will make a total return probably closer to 80%. Every percent over 10%, if you get a March-like event, is going to be about 10% total return in a March-like crash. So at 13% safe alpha, you might walk away with a 30% profit in a March-like crash. Pro would be walking off with 80% right now. But it's got a little more drag on the upside. Pro's going for the worldwide portfolio. You're going to own every major corporation in the world with UPRO, EDC, and EFO. It's a $100 trillion market cap. You're going to be long oil because the globalists hate oil. They hate carbon emission. Best way to get it out of the problem is make the price skyrocket. Probably going to see $100 oil with the globalists in control. That's been one of our best trades for these folks. We keep having to cut profits off because it continues to grow so rapidly. We're long copper miners, demand side growth, not regulation inflation. We're long Bitcoin. We're long spot silver with a special ETF that has the real deal. If you own SLV, get out. I'll tell you about that in the premium webinars. Get out of SLV. It is potentially going to collapse, and all that money is going to go to PSLV. And then we're long rare earth metals. So it's the same strategy, more diversified, safer. Okay, let me get Kurt his 500,000 screenshot. Okay, Pat's coming in at 10K. Okay, I've already got a 10K screenshot, Pat, so I'll get that to you next. Now, Pat, I need your phone number is all, so we give you trade alert updates. Okay, John's asking what the absolute alpha is about. Okay, Safe alpha is risk parity, targeting 25% a year. We won't stop when we get there. We're already at 25% almost for this year. So it doesn't mean we turn off the shop. But again, we're trying to protect wealth and safely grow it, outpace inflation, keep your money out of the US government from destroying its value, and do what the dirty crooks on Wall Street are doing. That's really what we're trying to show you how to do safely. So if you can't beat them, join them. Yeah, John, actually, when you get Pro, you get everything combined into one package and you save 75% if you bought them individually. So yeah, huge deal. I'll tell Dean to get a hold of you so you can get into the premium. Feels like you want to be in the premium right away. But yeah, Pro gets all of the products in one and saves you 75%. Okay, Kirk posted his phone number. Kurt wants to know exactly when I would sell UVXY. That is going to be really my specialty, Kurt. I need to understand what's causing the panic and try to predict the bottom for you. So yeah, that is finesse right there. That's probably my single greatest value to you is, that's basically what I spend 100% of my time about. Sure, do I want to know where to invest the money? Yeah. But more importantly, I'm worried about stock crashes, how to capitalize on it, and when to pull the trigger on selling UVXY. But the short answer is, Kurt, is we don't want to sell too soon. Okay, we don't want to cash out our insurance if something big is developing. So I'm going to be timid to take profits on UVXY because of that, because it's so critical to have that protection when things do get nasty, and they can quickly, as you've seen many times, I'm sure, in your investing career. Kurt says, how many times? Twice. Yeah, most of the time, Kurt, I'm happy letting it just kind of absorb the volatility and then come back down. And in the premium webinars, I'll teach you exactly how I predict the length of a crash and the size of a crash, or what I'm watching. So Tesla and Apple are the two stocks that I believe will give us a good idea of what's coming before it occurs, because those are so leveraged up into every portfolio out there. Then the bond market is the main thing we're concerned about, because if those interest rates, you got to realize this. Here's the big problem I see developing. If the interest rate on the bond market, which is skyrocketing up, it's at 2, okay? You got to realize the junk bond market, because investors were so disgusted by this interest rate. Yeah, huge moves only, exactly. Most of the time I'm happy for it to just wipe out all drawdown. And I want to sell it for many hundreds of percent only. Otherwise, I'm just happy for it to absorb the volatility, and that's it, because the rest of the portfolio does the job on the upside. Okay, so here's the big event I see happening. There's going to be a moment in time where people sell the junk bonds paying 4%, and they load up on the US bonds paying 2%, which are climbing towards 3 to 4%. So I think we're not far away, actually. But what's going to happen? Well, you got to realize, if the interest rates begin to rise on the junk bond market, 25% of those companies don't have enough income to service their debt. It's known as a zombie company. So because this market's been made so disgusting, the interest rate is pathetic, 2%. It's forcing investors who need guaranteed yield to go look for any yield that exists. Okay, you go to Apple, you're going to get 1%. Okay, nobody wants that. So they're going to completely worthless companies who have terrible balance sheets, whose companies are crushed because of the pandemic, and they're taking 4% interest on a bond that could default. It could lose 100%. Stupidest thing I've ever seen. And there's going to be a point in time where people say, screw this, I'm out. I'm going to go buy that guaranteed government bond where I cannot default, 100% guaranteed. I will get my money back. Maybe the value of the dollar is going to go down, but at least I get 100% of my money if I hold the duration of the bond. So the closer that 2% yield gets to the junk bond yield, you're going to get an event where the junk bond market falls off a cliff. Okay, then the companies in it can't pay their interest. They default because the only way they can continue is to borrow money at lower and lower interest. So that's one of the biggest risks I see approaching. I think it's 3 to 6 months out. We're going to get this stimulus deal and we're going to just melt the market higher. And eventually that'll probably be a volatility event. Now it's going to be short term because the Fed can fix this. They can go buy as much junk bonds as they like. But I do believe the Fed is trying to create this event so that they can go sneak in the climate change agenda. And now we got the Fed saying part of their policy has to do with climate change. What happened to them just protecting the value of the damn dollar? That's out the window. Now their agenda is controlled by the global elite. So that's the event I would really keep a close eye on. And we watch it every day. You'll have nothing to worry about if you are in the premium webinars. And even if you're on the free trial, we got you covered. We got that crash insurance in there at a huge level. Every percent over 10% is massive in terms of making a total return without touching anything. Okay, very good. Let's get some more portfolios built. I'm going to go ahead and unmute everybody. Find your chat box, post how much money you want to test drive, and then I will punch it into here and screenshot it, email it to you, and then you can build it out and see this works with your own money. And remember, you only get the bonus, which is exciting. There's 2 different bonuses depending on what makes most sense for you. That's only for investors who take the test drive, post in the chat box how much you want to use. I'm going to screenshot the trade alert and email it over to you. And that's how we get you on the special deal. Okay, Leonard has his microphone open. How's it going, Leonard?
Pretty good, you?
Doing great.
I love this system. It's just trying to get my wife on board.
Yeah, got to keep the wife happy. Happy wife, happy life, right?
Yeah, I'm telling you, it's very difficult.
Well, why don't you test it out with $1,200? You want to try that?
Sure, why not?
All right. Post in the chat box for me your phone number and email so we can get you on the bonus if you do decide to upgrade later. And I will shoot this over to you. So your trailer is 17 shares of UVXY, 7 shares of the triple Q, 1 GBTC, 6 copper COPX, and 1 rare earth metal. Okay, brilliant. Now, any questions, Leonard, about anything?
Oh, that's pretty good. I'm going to try to send over the information here.
Okay.
Go in.
Okay, and live we still have Samsung, PV, Pat, Martin, Mark, Kurt, Kirk, Kyakuma, Senso, John, HKP, Edgar, Buckwheat, Bob, Admin, and Leonard, guys. So go ahead and find that little chat box button. It's in the bottom menu bar. It's like a little circle with it's like a little chat emoticon or whatever. Click that and just post how much you want to test drive. Include your email and phone number. And then we're going to give you you're going to be on the exclusive bonus list. So if you do end up upgrading later, Dean has some killer deals for you.
Yeah, and there's some really cool content too, folks, that you will get access to when you do the upgrade. And we'll actually kind of walk you through how the Feds controlled the market, the stock market, the bond market, the value of the precious metals market, and the value of the dollar since its inception. So that's really cool. That is something that people just are absolutely clueless to. So that's a neat access piece that you get to, folks, when you do sign up today. Okay.
Now, Bob's saying, is there decay in the leverage products? Yes, there is, but we're still making between 5 to 10% a month with the decay, Bob. So yeah, not worried about that. We're smoking everybody. Market goes down, we're smoking you. Market goes up, we're smoking you. Market, yeah, I don't know what to say. The products do use futures and options to get you that leverage. So that's definitely a fact. But with that said, we're long and short. So typically if one's going down, the other's going up, right? And that's how we greatly outperform everybody out there.
Very nice. Jason and Martin wrote in, he wants to do 210,000.
Okay, Martin, you want to do Safe Alpha or Pro for your trial? All righty. Yeah, Safe Alpha's fun. Well, just think about it, guys. We're so confident you'll make money in a 1 week time interval, no matter when you jump in the program, that we give the product away for free to build your confidence. That's how confident we are with this strategy.
Yeah, and on that too, by the way, Buckwheat, what are you up? I think Buckwheat put to work 200K last week. And anyone else? And I think Bob put some money to work last week too. What are you guys showing as profits so far? And if you guys have your microphones, we'd love to hear from you verbally if you have that opportunity.
Now, Martin, I just need your phone number, please, for text messages.
It's up there in the first.
Oh, I got it.
Yep.
Yep. Great. My bad, Martin. Okay, admins from Canada. Canada's great. You can do it with Canada. Your Bitcoin you want to buy at Binance.us. So just find out how to get, with this portfolio, you'd want 8,000. Can you believe 8,000 used to buy a whole Bitcoin? Not ever again. Okay, very good. Let's get some more portfolios, guys. Remember, you don't get the bonus unless you post in the chat box. And just because I send you the screenshot, nobody will know if you really put it to work. Now, Edgar had a great point. You could watch it, paper trading. That's not the same. You want the emotional roller coaster. And for us, it's the proof that you won't have the emotional roller coaster.
Exactly.
Stocks go down, UVXY goes up. Okay, stocks go up, and actually UVXY is also going up.
Yep. Today's a perfect example. There's some profit taking going on in the NASDAQ, right? The NASDAQ's down 35 points here, but our portfolio is up 14,753, right? Because it's the balance of assets. We have our copper miners is up 12,000 for the day. Our rare earth miners is up $5,800 for the day. The Bitcoin's up $1,800 for the day, and the volatility hedge is up $220, right? So we're just not all net long, right? Where all of our assets are hedged against one another, folks. It's beautiful.
Now, admin, I need your name, email, and phone number. And I got your 10,000 screenshot ready to go.
Good. Well, it looks like we have well over 1 million coming in today, Jason. That's beautiful.
Yeah.
Nice. And Buckwheat, what have you made so far, bud? And Bob, what have you all made so far since you guys did put it to work last week? That's pretty cool, guys. Last week alone, so I didn't talk to a single person that made less than the cost of our Safe Alpha system. Everyone, literally every single person I talked to, Jason, made anywhere from 3 to about 30,000 last week. That actually put their money to work and test drove the system, right? So cool. Okay. Looking good. Okay, admin. Yeah, just type in your phone number there and your email, admin, and we will send over your screenshot. And just into that same chat box you typed into earlier today. Okay, beautiful. All right, Jason, I'm gonna post in their opportunity to get started today. And just note, guys, we do only do 3 spots per day per advisory service. Okay, we do limit that on purpose. Okay, we want our whole thing, guys, is we want to have the best level of white glove customer service of any financial services firm out there. Okay, and so we actually limit how many people we let in at one time. Okay, so I am going to get that posted in there in just a minute there. Okay. Okay, so you guys can click on in the chat box there. I did post in that link there. And just remember, it is limited seating. Okay, so your opportunity to walk in one of 3 spots is available there today. And you can click on that blue link to do that as well. Okay, and so what I'm going to do at this point, guys, is I'm going to go ahead and transition over my screens here. Okay, we'll take a look at the rest of this. The rest of the data here today, guys. We'll get you closed out. The people that do get signed up will get access to our website. They'll have additional content to continue to learn and benefit from. Those of you that don't won't get that access. Okay. So very cool.
All right, Dan, I'm gonna go ahead and hop off. Now, admin, if you do want to post your email and phone number, we can get you that trade alert out. Okay. Okay, beautiful, Dean. Well, I'm gonna get the rest of the content out to our members, and thank you guys all for joining us live. We'll be back tomorrow, same place, same time. But Dean's got a great into the show now for you.
Okay, thank you, Jason. Appreciate it. And just folks, want to thank you once again for joining us here today. Okay, that link is posted into the chat box now, so you guys can reserve one of 3 spots available today. Okay, so there's going to be 3 spots for the Pro, there's 3 spots for the Safe Alpha, and there's 3 spots for the Absolute Alpha Bootcamp. Or if you want to combine all those, simply simply select the Pro selection. Okay, and all you guys that put money to work, you should have absolutely made more than the cost of any of our programs if you're using more than 100,000 to invest. Okay, so very cool, and want to thank you for that, folks. Just make sure to click on that link. Okay, so how can we help you and your family today, guys? We have 3 portfolios you can build with us today, depending on your goals and risk tolerance. We will cover each portfolio in great detail in the following minutes. Jump in and ask questions during this process to make sure the portfolio is perfect for your goals. I'm going to unmute all microphones now so you can speak with me directly. Okay, so I'm going to go ahead and unmute all of those. Okay, and anyone that has a question, just jump in there. Look forward to answering any questions you do have. Okay. All right. And if anyone wants to let us know how much money they made since they've test drove the strategy too, we'd love to know that as well. Okay. All right, guys. So the first one we're going to cover here is the Safe Alpha. Okay. It's really neat, guys, for investors that really want to speed up the retirement process. Okay. And once again, we're not trying to outperform the S&P 500, guys. It's just what it looks like when you're positioned beautifully. Okay, and we are outperforming the S&P 500 by 500% currently. Okay, so when we said it's going to speed up the retirement process, well, I think you guys can get a feel for that. Okay, very good. Let's see here. Yeah, John, we don't actually show off the Absolute Alpha Bootcamp. When you sign up for either the Safe Alpha or the Pro or the Absolute Alpha Bootcamp, you'll get that access today. Okay, happy to report to you though that one is up over 57% in 7 weeks here, year to date. Okay, using ETFs, and I know it's really high, but that is the actual number. Okay, and then the cryptocurrency portfolio is actually up over 150% as well, year to date. Okay, so guys, great for the Safe Alpha is great for investors looking to outperform the market in a safe manner. Guys, my whole thing about investing in the market, right? I'm a really financially conservative person. Okay, recently I could have went and bought a brand new car, but I didn't. I went and bought a 10-year-old car out of Texas that I got a smoking deal on, right? So when I put money to work, I want to do it safely. Okay, I want to do it super safely, and I want to always make sure I have a protection that's built into the capital. Okay, so the Safe Alpha is certainly going to show you how to do that. And no joke, guys, if World War III started tomorrow, would never want that to happen. But just if it did, look, the S&P 500 would certainly go limit down 20% tomorrow, and they'd actually shut the market off. Okay, but you know what? Our clients and the Safe Alpha would literally wake up with a massive growth to their account. Okay. And that's why I love this, guys. That's why then more than 1,000 of our clients love this portfolio so much as well. Okay. This is our number one selling advisory service in 2020. Okay. Um, and guys, it's so cool because it had 80% less drawdown compared to the Dow Jones in 2020. Okay. This portfolio uses ETFs to be long or short specific asset classes. Okay. Minimal changes throughout the year. We only made 5 changes, guys, in 2019. We had 10 changes in 2020. Okay. 150 hours of live education and Q&A with like-minded investors. This is the coolest thing, guys. Really, this is what, I was just talking with one of our multimillionaire clients on Friday. He said, Dean, the neatest thing about what you guys do compared to every hedge fund I've ever worked with, and the guy's really successful, right? So he's been involved with hedge funds previously and actually had 2 really bad experiences with hedge funds. Okay. But he said, the coolest thing about everything you guys do is Jason's education. Okay. And me being able to ask questions to him live, that's what helps me continue to add money to your system. Okay. And to follow you with 7 figures. Okay. So I thought that was really cool. Okay. But really, guys, that's the huge difference of what you're going to get from us compared to any advisor on the planet, any mutual fund. Okay. Any hedge fund. None of them are going to teach you anything, nor are they going to have Q&A sessions for you weekly. Okay. We will. And it's really cool, guys, because it really builds that confidence. Okay. And look, there's no other service on the planet that you're going to be able to talk to the chief investment officer at a scheduled time on a weekly basis. It does not exist. Okay. We made sure to differentiate with that aspect of our business. Okay. No options are used, yet massively outperforms the overall market. And we looked earlier, right? Over 500% better than the S&P 500. Okay, my 7-year-old is following the system. Guys, if he can click the 4 buttons to get into a position and the 3 buttons it takes to exit a position, you can too. Okay, simple math. It's all you need. Simple math, some capital, and a brokerage account. Okay. So guys, the free bonus when you do sign up for the Safe Alpha is a 30-day access pass to our Absolute Alpha Bootcamp. Okay. So as John was asking about, you will see that portfolio set, John, after you do sign up, bud. Okay. And you will get a free 30-day bonus to the Absolute Alpha Bootcamp. Okay. Safe Alpha trades and webinars, guys. Monday, Wednesday, and Friday, we're going to meet at 1:30 Eastern. Okay. You're also going to see all of the recorded content. So you can see, how Jason has, restructured and repositioned the portfolio over time. It's really cool. And it's neat to be able to see that Jason tells you literally weeks in advance before we make a change. And then we make the change and you see it in the portfolio. Okay. So it's really cool. You have to be a really high level of intelligence to be able to see things before they shape up, prepare for it, structure for it, right? And be able to grow your capital because of those things, right? Make sure to learn that process from Jason, right? And you're not going to learn it in the first year or the second year, but year 3, year 4, you guys are going to start, you probably won't need our services, and we're okay with that. Okay. Because every time we can build an independent, successful investor, hey, that's our goal. So awesome. Okay. Now, most of our clients make enough with us that they don't leave, right? And they actually hang around because they love the additional education. They love the ability to ask questions to Jason. As we see, markets are obviously dynamic. They're always changing. That's what's so fun about it for us, guys, is it's hard and complex. Okay. And we love that. And I know most people aren't the same way, but that's the way we are. And that's part of how we help clients. Okay, let's see here. And John said, questions. It sounds like you reached your goals percentage-wise, 25% and 60% on both portfolios. Are you too late to the party? No, John. Quantitative easing, but is going to be in place for 5 to 10 years. Literally, guys, and I'm not kidding you, this is the time to speed up your retirement in the stock market. This is the time to increase the optionality you have in the stock market. Okay. So no, John, look, I really think our safe alpha portfolio is probably going to do over 40% this year. Okay. But I'm going to continue to tell clients that we're looking for 25%. Why? Because if every single time I undersell and over deliver for one of my clients, they bring me their friends, they bring me their family members, they bring me their coworkers and their neighbors, right? If I take the other route, the exact opposite happens, right? So we'll always undersell and over deliver, guys. Okay. Great question though, John. Definitely great question. And no, and just while you're actually, that's a great question. I want to tap on one thing just to show you guys here too, because this is something I was looking at last week, and this commodity super cycle is going to be wild. Okay. And I want to show you guys actually just like get a feel for what it did last time. Okay. So this is one of our positions in our rare earth metals. We last time we got a commodity super cycle, right, was 2005 through 2010. Okay. It was a 5-year trend, John, right? So the really big, unstoppable macro things that exist in planet Earth, guys, that you can benefit from with your money, they don't happen overnight. It's not something that you're going to go day trade, right? They're long, multi-year, unstoppable movements, right? And it's so cool to be able to get the exposure. Now, are we going to go overweight the portfolio and just go all into this asset because it's ripping here at up 6.4%? No, absolutely not. But are we going to take advantage of that for the next few years, make massive gains on it, sell it, and then reposition the portfolio? Absolutely. Okay. And seriously, guys, here, just to show you guys too. So these are our smaller positions, right? But yeah, we're looking for the run in copper too. Look, we don't even have anything historically we can compare to it. I mean, we're starting to see some huge volumes come into this. That's really cool. But yeah, guys, really this trend right here with COPEX, we don't have any historical data. It's so unstoppable for the size of just one project alone to basically increase how much copper is going to be needed to create it. Let alone the U.S. transitioning over to green energy too. But the Belt and Road Initiative alone is going to skyrocket this asset for years to come. Okay. So just kind of cool. And once again, guys, and look, if you were just net long the TQQQ position right here, right? You wouldn't be having an up day because there's a little drawdown in that. But guess what? Because we have 1, 2, 3, 4 other assets, right? So a total of 5 assets in this portfolio, we're still growing. Okay. And it's a down day on the market today. But you know what? We're going up, and we're up at 1.49% right here for the day, or 14 grand. Okay. Look, if most of you guys are probably just, let's see here, net long Apple, but you're not doing it with the TQQQ, so you're actually not making nearly as much money. You're down 1.3%. Okay. Let's see here. Tesla's another one. Okay. It's down 2% too. So look, the biggest 2 positions, and literally 90% of the people I talk to's portfolio are down today. Okay. But we're smoking here at a $12,000 profit on COPEX. We have a $5,000 profit on our rare earth miners, $1,700 profit on Bitcoin, and our volatility hedge, because there's a little bit of profit taking right now, is pushing to the upside. Net results, $13,000 push upwards in the market. Okay. Okay. Oh man, Buckwheat used paper trade, but he said he started 200,000 on Friday, and he would be up 4,150. Okay. Well, Buckwheat, definitely a great way to see how it works, though, right? Very cool. Oh man, I was hoping you're going to tell me that was real money. Bummer. Okay. Well, I'm sure I'll talk to a few people today that make $4,000 in real gains too. Okay. So dang, Buckwheat, but I love that you're seeing it grow here. Okay. And yeah, guys, so it's kind of important to understand too. So in the TQQQ ETF, it's really important to understand that number one, this outperforms Apple, Amazon, Microsoft. I don't care what $10 billion plus stock you want to throw at me. None of them have outperformed this since its inception, period, bar none. Okay. Literally, statistically speaking, there's nothing over a $10 billion market cap that's outperformed this over the last 11 years. Okay. Go research that. Okay. Go prove that to yourself. Okay. And no, Tesla didn't. Okay, we used to play this game actually. If we could guess if there was if there was an asset that outperformed it, kind of got boring because we were doing the same thing every day. But yeah, guys. So once again, profit taking day here on the market. Down day for the S&P 500, down day for the Nasdaq, but we're growing at $14,000 plus for the day. Okay. Pretty cool. And if you compare it, and Buckwheat, take a look at your actual portfolio, right? That's on the paper trade, compare it against what you are paper trading, just to see the differences, right? So you can feel, so you can start to feel it. Okay. So very cool. And John, I love that question, bud. Thank you very much for asking that. Okay. And look forward to more coming. Okay. Now, guys, the Absolute Alpha Bootcamp is looking for a 100% plus annualized return. Okay, and holy moly, are we smoking that anticipated goal as well in our target. Okay, we're just shy of 60% for the year, no joke for the year. So that's 7 weeks. Okay, but it's very attractive to investors that want larger risk and returns. Okay, this service and really, guys, my clients that have less than $150,000 total to put to work love this thing because they're behind either on their retirement goals or they haven't been smart enough to invest money instead of save money, because saving money is ridiculously unintelligent. Okay, because it just diminishes in value. I mean, look at any, the dollar's had one bullish period in its entire existence. And outside of that, guys, it just consistently goes down. And right now, with all the money printing, it's going down at 10 to 15% per year, depending on where you are in the United States, right? So don't be the saver, be the investor, okay? Because you're going to be punished to be a saver. You're going to be rewarded to be an asset holder, okay? And also, if you're smart, you're going to get the best assets that are in unstoppable trends that you can make massive amounts of long-term growth with, okay? So just real quick too, guys, and this is a stock ETF portfolio too. It's not going into individual names to get the bigger returns. It's still using ETFs, okay? And it's engineered for massive growth. Plus, we'll send out other trade alerts and more exotic opportunities. Okay, changes will be made on a monthly basis to ensure maximum growth. So you're going to do the most changes in this one, certainly. Okay, probably one per month. You're going to have 100 plus hours of live education and training each year. You're going to have a sophisticated balance of core asset growth classes. Many are new to the market, guys. And when we see new asset classes that come to the market, we're going to put you in them. Okay. So options are utilized to take advantage of individual companies at times. It's not rare. We don't even put it into our track record, but we do put those out. We only did a handful of them last year, but they averaged 68% return. Okay. Absolute Alpha Bootcamp members also enjoy additional cryptocurrency portfolio that's produced a 100% plus return in the past month alone. And that one actually, folks, as of this morning, cracked 170% this year. And a lot of people have been asking me, well, Dean, don't you think this is the top with cryptocurrency? Well, guys, no, certainly. Okay, you're seeing the transition of a frontier market to a multi-trillion-dollar market. It's not even in the trillion-dollar market cap level yet, all of crypto. Okay, we think it's going to go to probably 4 to 5 trillion by 2030. So you want to front run that. Okay, you want to get behind it sooner rather than later. Okay, and the last time Jason put together a cryptocurrency portfolio in 17, our clients made actually 1,300% return. Okay, so up here at 175 for the year, is it too late? I don't think so. Okay, free bonus, okay, guys, is a 30-day access pass to our Safe Alpha portfolio. Okay, exclusive live webinars and trainings every Thursday at 3. Okay. Now, last, guys, the Safe Growth Pro is where all of my millionaires have gone as clients. Okay, it's very attractive to investors with $500,000 to $10 million to work with. Okay, this portfolio will show you how to trade like the top hedge fund managers on the planet without the 2% management fees or 20% performance fees. Okay, changes will be made on a weekly basis to ensure maximum protection. You're gonna have 150 plus hours of live education and Q&A with like-minded investors. Has a sophisticated balance of core asset classes. Okay, there's actually 8 asset classes that this is in. Okay, and they're all completely different from one to another. Options will be utilized to completely atomic bomb proof your capital in times of volatility. Okay, the Safe Growth Pro clients enjoy paying an absolute fraction of what previously underperforming money managers, mutual funds, and hedge funds charge. Okay. And it's so cool, guys. And it's a flat rate. And when you guys lock in your rate today, when you get signed up, you're locked in at that rate. You don't have to go higher, even though your capital is going to grow with us. The fee that you pay doesn't. Okay. And that's why our ultra wealthy clients, all of our millionaires, deca millionaires and above, they absolutely love this, right? Because they can, with 1 hour's worth of work a year just replicate what we're doing, they're able to cut this management and performance fee to an absolute fraction of what they've ever paid previously. Okay. And it's flat, guys, and it doesn't grow when your capital does. It's really cool. Okay. So just pretty cool on that. And in the free bonus, guys, you do have an annual access to Safe Alpha and Bootcamp for free. So that is not something we will continue to do throughout the year, but that's the opportunity that you have to access when you sign up with the Pro today. You will get access to the Safe Alpha and the Bootcamp. What a lot of my clients are doing, folks, is maybe an 80% allocation to the Pro. That way, the majority of their capital is in the safest assets possible and the safest setup we have possible. But they take 10% and go with the Safe Alpha and 10% go into the boot camp. That way, they with a smaller portion of the capital, they get incredible performance. Okay, and not to say, guys, that this is going to underperform. Okay, throughout time, it's always going to have more hedging in place. We're always going to be a lot more paranoid for this portfolio set, guys. But that's exactly what our millionaires want. Okay. And so it's really cool to be able to get yourself into those packages. And then a lot of our millionaires too, they're building their grandkids and their kids actually portfolios with the boot camp and with the Safe Alpha, right? So it's pretty cool. Let's see here. How many clients do you have? Yeah, John. So we have just over 1,000 clients. And yes, John, we have clients in 19 countries outside of the United States of America. Yep. Great question, John. Yep, we've been seeing a huge growth in Asian customers. So all parts of Asia have really been attaching to us recently. And then we've had a massive influx from Canada too. And I don't know what it is. I mean, literally our business in the last 2 years went from 2 countries to 19 countries that we're working with. But I think it's just the reach of YouTube. It really is pretty vast. So it's kind of cool. Okay, guys. So that explains it. Oh, the other thing too is the boot camp training. Okay, webinar is going to be Monday, Wednesday, and Fridays at 3 Eastern time. Okay. So pretty cool. And for all the business owners out there, guys, make sure you use your business credit card when you pay for this. That way you can write off the cost of your business. Okay. So pretty cool, and not something you can't write off the cost of money managers, mutual funds, and hedge funds through your business. You can absolutely write off our fee through the business. Okay. So meet our team, guys. You heard from Jason. Okay. And yep, we are young guys. A lot of people call and say, God, I can't believe you guys are as knowledgeable as you are for your age. Well, we started at a young age, guys. Jason and I both started paper trading at 16 years old. We both started using real capital at 18. Okay. So yeah, we're young. And it's kind of neat because we've been able to use technology to really advance how much knowledge we've learned in a small amount of time. Okay. So it's kind of cool for our clients to be able to attach to that and learn from us. Okay. Ryan's he's our chief technical director. Okay. He's the one that makes sure everything's super easy for you on the tech side. Really cool. And he builds in all the autoplay integrations that we have for all of our webinars. So if you ever miss the webinar live, you guys can always just replay it. You can click on the text or you can click on the email and that will auto replay it. Okay. And next, guys, you're going to see our team of investment consultants. So Damien, okay, Wendy, Ryan, Robert, and Keith. And this is so cool, guys, because Damien was actually a client that's turned team member. And Damien's actually a partner with our firm now. So it's really cool. Wendy was a potential client that we hired because she was so good and she asked so many good questions. We actually literally just hired her. Okay. She actually brought in Ryan, her brother-in-law. Okay. Which he brought in Robert. Okay. And it's really cool. Keith is actually another client turned team member. Okay. So pretty cool to see that. And, as things evolve, guys, I think we're actually going to only exclusively hire clients to join our team. Okay. So that's kind of cool. Okay, so if you have questions, guys, before you do sign up, give me a call, 505-322-7515. Once you do sign up, guys, Jason's going to be your dedicated resource for any and all questions. I just want to encourage you guys, ask all of your questions you have live in the webinars. Okay, the more questions you ask, the more confident you're going to become, the more you learn from us. Okay, and harness the 36 years we've spent ferociously studying the market. Okay, leverage that, use that to your advantage. Okay, this is really cool too, guys. You also have Jason's father, Victor, as a dedicated support specialist to help with anything you need. So after you sign up, if you have any questions, just call him directly. There's no automated phone systems. He's a great guy. You guys will love meeting Victor. He's a super cool human being. He's actually a retired electrical engineer, super smart guy that just loves what we're doing. He came out of retirement to help us. Okay, pretty cool. And thank you, Victor. Always appreciate that support. All right, guys. So are you ready to get off the sidelines and join our winning team? Go to portfoliobuilder.io/pricing and sign up now. Okay, just remember, guys, this is limited to 3 spots per service per day. Okay, so once again, that address to go to, it's Portfolio Builder. Okay, not Portfolio Builders, but portfoliobuilder.io/pricing. Okay, or if you're here in the webinar, guys, simply click on the link in the chat box and pick out the portfolio you want to use with us starting today. Okay, all right. Any questions, guys? Anyone have a mic that wants to say hello to? So go ahead and feel free to jump in there, guys. I will have to hop off in just a couple minutes to meet some of my high net worth friends for lunch because they want to learn more about our portfolios. Okay. Very cool. Okay, guys, looking good. Admin, Bill, Buckwheat, Edgar, HKP, John, Kirk, Leonard, Mark, PV. Any questions there, folks? And Edgar, thanks for joining in, bud, and sharing your story again. Super helpful for people to hear that. Okay. And awesome to hear, Edgar. You're up 13K. And is it 10 or 11 trading days now? It was beautiful. Okay, guys, looking good. So I don't think there's any more questions at this point. Feel free, guys. If you do have any questions, just give me a call. Okay, but make sure to go to portfoliobuilder.io/pricing to go ahead and get signed up before we remove our discounted pricing that we have available at this time. All right, folks, and with that, I want to thank you very much for taking the time to join us here today. Okay, and just real quick, I'm going to go to our disclaimer slide here. Okay, so so you guys can take a look at that, and obviously investing is risky, and you can lose your entire investment. Okay, our model portfolio is hypothetical, so we can legally demonstrate real life trades without actually front running our clients. Okay, so just always have to do the standard disclaimer there, and folks, truly appreciate your time and attention today. Okay, click on that link to sign up. And if you have any last questions before you hit the add to cart button, just give me a call, 505-322-7515. Have a wonderful day, folks. And once again, that's 505-322-7515. Folks, if you did call me or text me over the weekend or on the holiday yesterday, I will get back to you. But just know that I actually had over 80 incoming responses. Okay, so that may be a little delayed. Okay, but thank you guys for asking your questions here. Truly appreciate that. Helps streamline my time so much, and look forward to working with you, on the client side of things. So once again, folks, any questions, give me a call, 505-322-7515. Have a great day, team, and we will see you on the client side webinars after you get signed up today.